Well, today is Friday, the 1st of June, 2012. I said yesterday to watch out for the fakes. Apparently, a few people didn't like the comparison that I was given. I really don't care too much, but as far as the chart analysis is concerned, I don't want a straight line. I want a uptrend line. It had a small breakdown, obviously, this morning below this line, and it also broke down below this low. The highs, for that matter, this high, you got this high, and right now it's lower, but the market is obviously still moving fairly nicely, trying to get above this significant Fibonacci level at 2844. The more often you test it, the more likely it is that you take it out. If you take it out, the likely resistance spot for the next level would be up towards 29.5, which would then bring it up to about 30. Let's move this on to the daily chart for today, and up towards this 18 period average of highs, and been battling within this trend for quite some time now. We're also going to have an outside period, which means that the low is lower than the previous period and the high is higher than the previous one as well, which means things are usually ready to get going, get active, exploding, if you will. And I'm also seeing a lot of similarities to August 24th, 2010, so I'm not going to quite say that this is a rally you should take serious, but it's getting close. And quite frankly, within this daily chart, I'd still wait to want to see patterns showing breakouts within this chart. But the volume this morning, at least on SLV and even on the contract futures of the XAG/USD, is pretty decent to say the least. And it did have this nice breakdown beforehand, which is a very common thing as well. But obviously, it has a long ways to go for this trend to get reversed. If we take a look at this on the monthly chart, yes, last month was a loss of 10.5%. And quite frankly, we got this major level of support. If you look at this, you can pretty much see a descending triangle. And a definition of descending triangle, according to Investopedia, is a bearish chart pattern using technical analysis that is created by drawing one trend line that connects a series of lower highs and a second trend line that has historically proven to be a strong level of support. Traders watch for a move below support as it suggests that downward momentum is building. Once the breakdown occurs, traders enter into short positions and aggressively push the price of the asset lower. So quite frankly, it's not going to be bearish until it breaks down below this level. Therefore, to me, it's like a symmetrical triangle. They say it's bearish. To me, at this level, it's still neutral, as this trend line, which connects all the points on a logarithmic chart, has been resistance, obviously, twice since it originally hit its top period, and 26 has been support on 4 different occasions. So if 26 does get taken out, it probably will have a fast movement towards these levels in here. But quite frankly, if it does break well below the 26, even 25, yeah, I'm going to think there's a decent chance that we do go down to this lower level. But at the same point, I'm going to be expecting the chances of the bottom to be within this area at a very high probability rate, to say the least. But until this level gets taken out, then the move from, or this bullish move from at least point A to point B, or definitely from this point here to point here, it's still bullish from the August 24th, 2010 breakouts, it's not bearish from this August 24th breakout, as long as it stays above the 26 and 1/3 level, which has so far been the case. Breaking above this trend line, well, that will automatically change the pattern, of course, and one of the things that you're looking for. Of course, I'm still looking forward to hold and stay above 40, and that will be it for today's video. Thank you for tuning in. Bye-bye.